What's up, you guys? Today I'm going to be talking about the top 5 stocks that you should be looking to invest in if you wanted to invest in dividend investing. I'm going to be naming the top 5 that I see personally opportunity in this year due to this whole pandemic going on. All I ask, if you could just take 5 seconds of your time, hit that like button below. It really helps out this channel. I'm going to go on the computer now to show you guys basically my thoughts on it, the dividends history, and so on. Okay, we have here the first stock, Microsoft, ticker symbol MSFT. I wanted to talk about this stock because this stock has been a very good long-term stock to hold on to, and it pays pretty good dividends. I'm going to show you guys here within this 180-day chart here. You can see it was trading at 140. Now it peaked all the way to 200, making new all-time highs. All these tech stocks such as Microsoft, Amazon, Tesla and Apple have been making new all-time highs. So honestly, this is a really good stock that pays dividends as well as growth over time. So we're gonna go here and show you guys this time frame that we have here, and let's go basically to 10 years ago, and let's go weekly. And you can see this growth here is crazy to see. I mean, 10 years ago you would have invested, the stock was at $23. In 10 years you would have had 10 times your money of your initial investment, along with all this dividends that paid out. You can see here they've been paying out dividends, and it has been increasing over time. At first it was 13 cents for a share of $23, and it has been increasing over time. Currently they're paying 51 cents per share every quarter from owning this stock. This is a good long-term stock to hold on to and get paid dividends, as well as having it grow over time. And I'm also going to go here to show you guys basically the balance sheet. How you can actually see the balance sheet is by going to a website called Market Watch, and you can just type in the ticker symbol here, MSFT, Microsoft. You scroll down here and you can go to financials. Once you go here, you can basically see the charts and everything of how much cash the company has on hand, how much assets they have, how much cash flow they have as well. So you guys can go here basically and see the balance sheet of the company, and you can see how much cash they have on hand. You know, Microsoft has a lot of cash on hand, $11 billion, and they have a lot of assets as well. Total assets revolving around $175 billion. They have a lot of cash on hand. This is a very, very good company to hold long term. They're not going anywhere within, you know, a couple of years from now. Total assets in total, $286 billion. $286 billion in total assets, and you can see their liabilities is 184. So on long term, this company is a very good stock to hold long term. It will also pay you out good dividends as well as long term growth. And this is a stock that I personally am buying little by little and adding to my long term portfolio, as well as Amazon, Tesla, and Apple. The next one I'm going to be talking to you guys about is JP Morgan, ticker symbol JPM. JPM is, you know, one of the biggest banks in the United States, JP Morgan, and due to this whole pandemic going on, they did take a dip in the market. So that's why I wanted to point it out to you guys now, because actually it's a good opportunity to buy, and it's a very good dividend stock as well. So let's go here, and you can see here 10 years ago it was trading around $40. Currently hit the all-time high of 141. But what I like to see here, guys, is if it's below this white trending line here, it's a good opportunity. When it's here, it's a fair value. And right now it's a bit on the you know, sale side, so it's a good opportunity to buy at the moment, to load up a bit of positions here long term, and even more if it touches around this lower end here. This stock is good because it pays out very good dividends, and it's one of the biggest banks in the United States, if not the biggest. So let's go here, and you can actually see how much dividends they're actually paying out every year. So 10 years ago they were paying about $1.09, and every quarter you can see it has been increasing little by little. $1.12, $1.20, $1.27, and you can see here. Oh wait, never mind. Oh, that's 25 cents. Fuck. Take that back, Joy. Take it back. Weekly. So you can see here basically the amount of dividends they have been paying out. 5 cents, 5 cents, 25 cents, 25 cents, 30 cents. Every quarter they have been increasing. Now it's 38 cents and so forth, right? Now 40 cents, and every year they're increasing it little by little. And you can see here right now it's a good opportunity to buy into the stock because it's under fair value here, and they're paying around 90 cents in dividends, and you're also getting growth long term. A reason why I'm mentioning these stocks is not just because they pay out dividends, it's because they grow over time within a few years, and they pay out good dividends. I see a lot of YouTubers just go for basically the long-term dividends, but me, as my investing strategy, I like to get a stock that pays out good dividends as well as long-term growth in the overall market. I want to see within maybe 10 years the stock growing maybe 3 to 5 times its value, as well as paying very good dividends just for owning that stock. So JP Morgan, I see, within the next couple of years after this whole pandemic is over, I do expect it maybe even could touch up to the all-time highs of $200 within a couple of years from now, and also pay good dividends for owning that stock. So this is a good company that I see long-term value in, and I'm also going to mention a couple of other stocks I see that have been taking a hit due to this whole pandemic going on, and that you can actually take advantage of. So we also have here, the oil industry has been taking a tremendous hit, and the oil industry is not going anywhere, especially after everything's going to go back to normal. I do expect oil companies to do great. I do think Tesla is the future, electric solar panels is the future, but that's in a lot of years from now. So Chevron is a very good stock that I personally think it pays out very, very good dividends, and right now you can see it's trading undervalued at $87 range. It dropped all the way with this whole pandemic going on down to $50, but they do pay out a very, very good dividends here, you can see, and it has been continuous within time. 10 years ago they were paying 72 cents per dividends, and up to now they're still paying out the same amount of dividends as far as growth goes, and they haven't cut back dividends. A lot of these companies that used to pay dividends have maybe stopped dividends due to this whole pandemic going on, but Chevron has been continue paying out dividends, and they're currently paying out $1.29 per each share that you own. And you can see here that's on the undervalued side. It's a good long-term opportunity to buy into the stock, hold on to it, get paid dividends, and wait for it to recover. I would start buying in still small increments that we could basically maybe see this go a little lower here until these two moving averages cross. We're not really bullish on this stock, but I do think when the whole economy recovers and people are starting to go traveling again, and the oil stocks will go back up, it's just a matter of time. Maybe I would say 1.5 to 2 year time frame that we start becoming more bullish in this market here for the oil stocks. And the next stocks I'm going to be talking about is stocks that I've been talking about in my previous videos here. So we have here PK, which is a Hilton stock. I'm also going to show you guys the market balance sheet for this stock, and they previously did suspend dividends for the stock, but at the moment, I do think it's a very good opportunity. Anything below $10, I see value in PK. And I see value in this just because in 10 years from now, I know people are going to go, in 2 years from now, I believe personally there's going to be a vaccine. People are going to go back to work. Hotels are going to be back to normal. So I'm okay with the dividends being suspended currently. And I do know that when this whole pandemic is over, it will recover and hopefully hit around this normal trading value that I was trading at, around $30. I do expect it to take maybe 2, even 3 years for it to normal out, but just having this very, very good dividends payout for holding the stock is worth it. So currently, before this whole pandemic, it was trading at 45 to 55 cents for each share that you own for dividends. And I currently own about, I believe, 4,000 shares of PK. And when things go back to normal, it's going to be paying out dividends every quarter. And it's just making money off just owning that stock. So I'm going to go here to the balance sheet to show you guys PK's history. So we're going to go here. Like I said, you could just go to Market Watch. You click this search and you pick it, your ticker symbol. You're just going to go here to financials here. And now you're going to go to balance sheet. And here you can basically see how much total assets they have on hand, how much cash they have on hand, how much total liabilities they have on hand as well. So total assets in total, they have $11 billion. They don't have a lot of cash on hand, about 386 million. They have a lot of total assets on hand as well, and total liabilities are 4.84 billion, which is not too bad. And it's a very good long-term opportunity. I don't think Hilton, the company, is going anywhere. I do think within 2 years people are going to be booking hotels. People want to travel. I just think it's just a matter of time. So I'm holding on to the stock long term. You can see here that with these lines here, that you can see it's undervalued as well. So anything, and it's kind of bouncing off this trend line that I currently made probably like 3 weeks ago. I made this trend line here. So I do think it's an opportunity. Anything below $10 is a very good trading value to buy PK at. I do think long term it's a very good opportunity. They currently suspended dividends at the moment, but I do think when things start getting back to normal that they're going to start paying out dividends. And the last one I'm going to be talking about is also suspended dividends currently, but for the risk versus reward, it's probably one of the best stocks to invest in currently. It's a company called MFA. This is a mortgage investment company, and they pay 20 cents for each share that you own, and the stocks are just trading currently at $2.86 and paying out 20 cents dividends before this whole pandemic going on. They did take a very big hit. It's trading very below undervalue. You can see here with these trend lines here, and you can see with this whole history, it's never really traded below that. And right now it's very undervalued. It dropped to as low as 32 cents, which is just crazy to see. So I do think it's a very good opportunity if you're looking for a very good dividend stock that pays out a lot, along as well as long-term growth. Before this whole pandemic, it was trading just around $8 flat, and it dropped all the way to 32 cents. Now it's trading around $2.46. So there's very good opportunity in the stock here, paying 20 cents, which is, if you calculate that, that's about close to 10% dividends just for owning the stock for now when things go back to normal. So long term, I do think this is a very good opportunity to buy. I currently have around, as well as PK and this one, I own about 4,000 shares of MFA. I'm going to be holding on to these two stocks long term for many years to come, as well as tech stocks. I'm currently holding MFA, PK, and a bit of Norwegian Cruise Line and Carnival Cruise Line as well. So let me just go here really quick to the balance sheet of MFA so you guys can see it. So we're going to go click MFA here. Like I said before, we're just going to go to the financials. We're going to go to balance sheet here. We're going to go to total assets. Total assets at $13.57 billion. Total liabilities is pretty high at $10 billion. So as far as risk versus reward, this stock is a bit risky, but the reward for it to recover and start paying out very good dividends, I think is worth the reward. I do think within 1 to 2 years it's going to take some time for this whole thing to recover, but I do think MFA is a very good investment. That's my personal opinion on it. Do your own due diligence when investing in stocks as well. For MFA, it's probably the most risk versus reward. Very high risk, very high reward, but you can see here that it's very undervalued as well. You can see here their earnings report was terrible as well. So earnings per share -$2. Previously they're making about 20 cents per share here. So the earning reports were really bad because, you know, a lot of people didn't have to pay their mortgage and with this whole crisis going on. But I do think when things get back to normal, things will start getting better for MFA. So hopefully this video helps you out, guys, if you guys want to invest in dividend stocks for this year of 2020. If you have any questions, leave a comment down below, or let me know what dividend stocks that you're actually looking to invest in this year. So make sure to like this video if you haven't yet, and subscribe, and I'll see you guys on the next video.